Hey there, it's Eileen Gilbo with the Real Las Vegas at Urban Nest Realty, and trying to add you some value to what your questions are in the community as it, contains or as it happens to be with the COVID-19, the coronavirus, all of that. So I partnered with Julie Sanchez of Alderus Mortgage today. And hopefully we're going to ask some of the questions that maybe you didn't even know to ask. And we're also going to introduce you to a really cool program for our hero community. Hey, Julie.
Hey, Lee, how you doing?
Good. How are you?
I'm good. Are you hanging in there with all this crazy stay-at-home coronavirus?
So little known fact about me is I homeschooled for 8 years. So I kind of feel very comfortable in this capacity. I love, for the most part, I will say for the most part, love having my kids home. I mean, the craziness doesn't normally bother me, except for when I'm trying to get on a Zoom call and record something, and then everyone's lives are threatened if they break out.
So I think it's become the norm right now that you hear, kids in the background, dogs barking in the background, people kind of going back and forth in Zoom. So if you see my husband go back, he knows I'm on a lot. But you know what? Life is life, and my dogs are, they're kids. So for me, I love being home because I don't get to be home as much.
Yeah.
It's a little different. I'm working at home, so I'm busy. So for me, it's not that bad. And my husband, on the other hand, he's a contractor. He's out talking to people, and it's kind of, he's going stir crazy a little bit.
Right, so moving, using his hands, doing all that kind of stuff.
Yeah, and I have to say, I feel for those of you out there that you have, kids and, not being able to work. I don't have that. It's just me and my husband and my dogs. And so, I can actually talk to an adult and say, hey, give me a few minutes here. And I know those that would have kids, it's like, it's hard to control that and work. So my kudos to you guys that have a family and you're all stuck at home and you're trying to work.
I changed from being in my home office to my bed, and I'm still using my computer and doing all of that kind of stuff. But I mean,
I find I work more. Because I can't, not leaving anywhere. So it's very interesting times. Yeah, absolutely.
Yeah. So I have had people kind of say, oh, so you guys aren't working. And I'm like, well, no, we are working. It's just at a little bit on my side, it's a little bit reduced. I'm not as busy as I was, but I know that when I talk to you, because you guys do refinances and everything. So, I mean, we were talking and you said you're actually busier right now.
Right. It's been busy because, right now the interest rates have kind of, I don't want to use the word stabilized, but they've kind of calmed down in this market. It was super ridiculously over the top volatile. That's the only way I can describe it. If I were to show you a chart, which I can actually bring that up in this meeting that we're doing, but the coronavirus and this pandemic has caused a stir. If you guys have watched not only the market with the stock market, but also, the bond market, which is where we get our mortgage interest rates. It has just caused a lot of stir. And if you can think, these are investors, either investing in the stock market, which is aggressive money, or putting money into the safe haven of the bond market, which is a more safe haven. However, it's just been crazy. And so interest rates were all over the place, really high. It came down bit, then they went high again. And so we're kind of in this place where they've been flat, which is good. Now we have opportunity. I don't know how long that will last. Anything can happen until they get this coronavirus under control. It's all unknown right now. So what I've been doing is trying to help people get into a better position, get their payments lowered, just to be set up for whatever is going to come next in our financial world and our economy. So yeah, I've been pretty busy.
So did you have any loans fall out once all of this kind of started?
Thankfully, I did not. Thankfully, I know there was some people that did lose out because they got furloughed, a job. They got laid off, which is really unsettling, unfortunate, but it did happen. So I did have a few that closed their homes on their new homes, and then they got laid off. So, one of the things that I just had to kind of encourage them, hey, listen, do whatever you can do to make your payment. The good news is when you buy a house, let's say you close this month, your payment is not due for, we're April, May, so June 1st would be. So at least they have a little bit of rebate. However, it's super unsettling. Just been trying to be here as a resource and to help guide and to give good information, because what you hear on the news is not always good information and not always accurate.
Well, and it changes so frequently that it's very hard to really have, precise, accurate information unless you're talking to a professional who can pull up those numbers right in front of them right at that moment. But then I think people don't realize too that, even if you are going to do a refinance because the rates are lower than what you previously had, it takes some time to get that processed. So even if you start today, by the time you actually get that processed, the rates could be different, right?
They could be. So that whole thing of working with an expert in this, in this field, even though I've been doing this over 15, watch the market, I have great resources. I will tell you, Eileen, in this time, I could not follow any trends. I could not, it was very difficult to help guide someone. What I've been seeing a lot now is, things are changing pretty much, not just daily. At one time, they were changing almost hourly, it felt like. But what we got to do is we got to try to mitigate as much risk as we can. We have to look at where someone is right now and see, does it make sense? It's not, and you said a good point. You made a good point. It's not just about the interest rate being lower. It's about where is that particular person right now in their mortgage? How long have they had their home? How long will they have their home? And a lot of times I've told people, even if their interest rate was going to lower a quarter of a point or a half a point or more, it may actually not be in their best interest to do anything. And there's a number of reasons why. It could be, the ratio of people that you're paying versus interest is actually at a good spot. Whereas remember, when you refinance, you reset that again.
Right.
Everybody's different. If you're looking to pay your home off sooner, or you're just looking to get extra cash per month and lower that payment, those are, that matters differently to different people. Yeah. So we have to know what's important to you as a homeowner.
Yeah, and I think that's kind of where sometimes we get short-sighted, is that we don't really look at, the long term of what really are my plans 5 years down the road, 10 years down the road, and what do I need to put in place today to be able to accomplish those. So, and it's hard because I think you really do have to find someone like you who's willing to have those conversations and not just say, oh yeah, you're gonna pay me to do this refi for you. Yes, I'll take that. And your interest in the matter doesn't really matter because you asked me to perform a service. Because I know I see that also, that, and then they get stuck in this new mortgage that they don't really understand what the ramifications were.
Right. Or they don't understand, was it really in their best interest to do it? Because it kind of sounds counterintuitive when you say, the lowest rate is actually not the best option always.
Right. And
to a typical homeowner. Yeah, but it really may not be the best option.
Right. Well, and that's, I've been talking to a lot of people now who are like, well, we're looking at refinancing. And it's like, okay, or they already refinanced. Now they're like, oh, I want to sell my home. And I look it up and I'm like, well, you haven't had this mortgage for 2 years. They're like, well, why does that matter? I've lived here 10 years, you know, and it's like, well, because you started over. You started back from day one. So now you may end up having to pay capital gains, you know, if you sell before that 2-year time frame.
Well, it depends also on the type of property. I mean, you bring up a good point. You know, if it's your primary residence, you do have a large threshold, if you're single or if you're married, whether or not it's capital gains, as long as it's your primary residence. And so, and don't quote me on this, as I'm not a financial or a tax advisor, but I want to say that it's up to $250,000 for a single if it's your primary residence, and up to $500,000 if you're married. So again, the key is what type of property is it to you? Is it your primary residence? Is it your secondary? Is it an investment property?
Yeah.
It matters.
So I did have a question. I know I'm getting a lot of questions from, I mean, even family members who have thought about going the forbearance route during this time, that have called servicers, and a servicer is whoever owns the mortgage note. And so then you know, they've called, everybody's getting different responses, and it just seems like clear as mud. So, you know, they're really having a hard time deciding what they should do. So can you give a little bit of an explanation as to what forbearance entails?
Yes, let me give some clarity, because you're absolutely right. There is a lot of confusion. There's a lot of misinformation out there about what forbearance is. And so let me actually say forbearance is a way that you can basically skip or miss a payment. It does not mean that you don't have to pay it back, and that's the key. It's not free money. It is not something that you take lightly. If you are presented with options from the mortgage servicer, and just a little clarification, the mortgage servicer is actually not the owner of the note. They're simply that. They're a servicer. So you'll understand this. A lot of people will understand. You know, when you have an investment property and you own that investment property, but you don't want to take the payments on that, what do? You engage a property management company who actually takes it for you. The difference, though, and this is key, and I'll come back to this, the difference with a mortgage servicer versus an investor, okay, that's what happens. So when you get a loan, a mortgage loan, your loan is actually packaged with a bunch of other loans, and it's sold in the secondary market, which is where we get mortgage-backed securities, which is where we say mortgage bonds come from, which is where we get our interest rates. So we don't get interest rates from the Fed when they lower interest rates. When you hear Fed funds rates, that's not where we get it. It's the mortgage bond rates. It's a safer haven for investors. So investors package these up, they sell it on the secondary market, okay? Now, those notes belong to that investor. The investor now has to engage a servicer, okay? Those are servicers like Mr. Cooper, I think Quicken One is a service. There's a lot of servicers out there. So that's where you get your mortgage statement from. That's who you make your payment to. So what happens is, though, the difference, though, between an investor and a property management company that's taking a rental payment is this contract between servicer and investor is a contract, and it's a very strict contract that the servicer agrees to pay the investor whether or not they receive payment from the mortgager or the homeowner. Okay, that's huge, and I'm going to come back to that. Okay, so we'll come back to that. So back to forbearance. So forbearance allows you to just simply miss that payment. You know how you know people have gone out and they buy furniture, and remember how they get a credit card and you don't have any interest payment or no payment until 12 months. Right. That's kind of like forbearance. You cannot make a payment in 12 months, but you still owe all that money once the 12th month comes, and then you pay all the interest. Same thing with forbearance. Forbearance can allow 3 months, 6 months, up to 12 months not making that payment, but now you owe that payment, And if you don't pay that payment, you could be in trouble of default. Okay, and that's when foreclosure comes about. There's supposed to be rules that there's not supposed to be foreclosure that happens. However, if a certain number of months goes by and you don't make that payment, indeed that can happen. So it's very, very critical that people read any agreement. I haven't made a video yet about forbearance because there's so much unknown right now, even in our world. I'm still getting new information about it. So I will be making a video about forbearance. I'll be posting it on Facebook, sending it out to my database, because what I'm also hearing, Eileen, is that if you are a homeowner and you choose forbearance, you're not going to be able to refinance that loan. It's not going to be a saleable loan, and that's huge.
Yeah.
And I don't know if it's ever or if it's a period of time, but that's huge. I don't know if you guys remember back in the modification days, whenever the financial crisis happened, when people did modifications, for a while there, we could not do a loan for a modification. If you had a modification, we could not refinance that.
Right.
That's kind of a similar thing. Now we can, and I'm not to say, but it was years later that was lifted. So it's going to be hard to understand and know, but this is what I'm hearing, at least in the near future. If you even engage a servicer about forbearance, you could be in jeopardy of not being able to refinance. So people just really need to understand, read the documents, understand what your options are, because now I'm also hearing you could potentially move that to the end of the loan. There's different options. I've heard about 3 different options. So people just need to really take the time, don't jump into it. Do whatever you can do to make your mortgage payment. Everything else, I'm not telling you, not pay other bills. I'm just saying do whatever you can to make your mortgage payment.
Well, and I've noticed that car companies, credit card companies, they almost seem like they're a little bit more willing to deal with people right now than the mortgage companies, because, and I think, understanding, thank you for clarifying that with me also about the mortgage servicers, because if that's the case, then no wonder they're like, okay, we'll give you this time frame, but on this date, you have to be completely caught up, is because they're still having to pay somebody also.
Yes.
So, if they're not getting away with not paying, then, the consumer isn't going to get away with not paying. I know that when I talked to my daughter, she said, well, I just wanted to call and see what my options were. So they would do a forbearance up to 90 days, but that 3-month worth of payment had to be completely 100% caught up by October 1st.
Right.
So
plus,
now you
plus
keep
October's payment.
Right, plus October's payment and plus every payment from that point on. So you're literally paying, a month and a half, 2 months worth of payments to be able to catch up, but you're not making any more money. So, you need to work with the companies that are going to work with you. And that was kind of my suggestion was, well, if it comes to that, call your car loan company, call your credit card company, call the people who will actually deal with you, and then take it from there.
Absolutely. And forbearance, honestly, is the last resort. Seriously.
Well, but they're making it, the way that they're pushing it, making it sound is like, we have this one-stop solution for everyone. And it doesn't sound like a solution at all, in my opinion.
And let's talk about the detriment that it's going to have on banks. Okay, so if you can, like I said, make your mortgage payment, that is going to be the best thing ever. I know this is a crazy time. It's unprecedented. We have not been in this territory before. It is uncharted territory. And people are starting to get upset about things. And I think we just need to keep our emotions under check, understand what's happening. And it's nobody's fault per se. Nobody brought this, people can say China did, but whatever, it's nobody's fault per se. We're all in this together. Everybody is dealing with the same kinds of things to a certain level. And so what we just need to do is be smart about it. And like I said, know that forbearance is the last resort. So let me kind of talk about why this is so detrimental to our banking system and the servicers, more than the servicers. That is because you can imagine the servicers have to pay the investors, okay, no matter what. If they don't get a mortgage payment from the homeowner, they still have to cut a check. They're cutting billions of dollars of checks to investors. Well, they're set up to maybe have a threshold of maybe 5 to 10% that of those homeowners that don't make it, they can handle that. They can't handle 40 to 50 or more percent. What will that do? That will cause servicing to go under. And that is a big, huge problem for our banking system. These are actually banks. They're actually banks. So what's happening right now is there's lobbyists, there are big names in the industry that are trying to get to, Congress and to the government and just really explain, hey, this is going to be detrimental to the system and to our economy. We need to get bailouts. We need to get help to these servicers so they don't go under. So that's why I think it's really important to get the word out that, again, about forbearance. It's the last resort. It's not just a flippant thing. We need to use our heads and our minds and really make sure, is this something that we need to do? I would say hold off on it. Don't even inquire about it until you literally are like, I can't make my payment. So, I do believe there's so much help out there right now with food and that kind of thing. I just have a feeling that hopefully there will be more help out there for homeowners as well, that are not able to make the payment. So,
well, and I think it'll bring about a big change in, probably all industries, because like you said, whoever in their lifetime thought, oh yeah, I'm going to be alive for a worldwide pandemic that is going to shut down the world. No one ever thought that we would, be in this place. So I think there's going to be, just like we had, a lot of regulations come out of the housing recession. I think we're still going to have a lot of, kind of implementation in different industries come out because of this. And hopefully, people are getting more educated on what these terms actually mean, because you don't want to, mess up in a way that now it's going to be detrimental to you for 2 years, 5 years, 10 years, down the road, especially when there are professionals that you can reach out and talk to.
And that's the thing. I just implore, anybody that before you do something, find an expert that you can actually ask some questions. Make sure you look them up. Make sure that, it's always great to get a referral from someone that, ask those questions. Hey, did they ask you questions about your home and your goals and what you're looking to your future? Because if you're just getting an order taker, I'm so sorry, but they're not going to look out for your best. They're not looking out for, how can they help your future and your financial position.
Well, and they also don't have the knowledge base that you would have to be able to answer more specific questions. Yes, they can fill out a document saying, yes, okay, you qualify for forbearance, or we can give you X amount of time, but to really explain the process, especially with as rapidly and as many calls as they're getting, there's no way for them to educate staff to have an answer for every situation. There's just not.
And, we do have a great tool in the internet, but, there's a lot of misinformation. So if you do look things up, just make sure that you're talking to someone that, can answer those questions and can help you decipher and make a good decision. But again, last resort, not forbearance.
Yeah, absolutely. So are you still seeing a lot of people wanting to refinance?
Yes. And that is because, with my clients, Eileen, I I keep in touch. I have, you know, in my system, in my database, I just, you know, I educate, I keep in touch, and I also let them know, hey, you know, now is, we're gonna have pockets of time when we can refinance where the interest rates are gonna be really good. So what I've done is pretty much for most all of my clients who are interested and have interest rates that want to lower and they want to lower the payment and it makes sense for them, I've got them kind of in my system set up so that when it's time and I see a really good opportunity in the market, they'll just go ahead and, okay, it's time, let's go get them locked in, and then we go from there. Because at this point, because of all the craziness within the mortgage world, we're actually not even, there's a lot that's changed. A lot of lenders are not submitting refinances without locking them first because they can't tie up the system. There is a lot that a lot of people don't know about how an interest rate lock works and how that can be risky to lenders with the interest rates fluctuating so much. So there's a lot on the back end that a lot of people don't even understand or realize that has really affected mortgage interest rates and affected investors and lenders. And so there's some new rules now. You'll see, I heard a big name out there, they won't even lock in until they're at a 15-day lock. And so that means they have to, I don't know how they're doing that. I don't know if they're putting loans in and then locking because of the risk. Not sure how they're doing that. We've been able to get people in, I get people and lock them, and then we've been able to close in between, depending on if we need appraisal or not, 2 to 4 weeks. So it's actually been pretty good.
Yeah.
I don't know if I answered your question or not. But
Yeah, well, because it's just interesting with, you know, the interest rates fluctuating as much as they have been. If people were still looking to refinance, as well as because some people have, you know, been laid off or they're on furlough, or, you know, there's so many things that have happened. I mean, some people weren't even laid off. Some people were just let go, you know, completely. So I just wasn't sure if that had affected the amount of refinances that you're seeing.
Hasn't. I imagine that I would see more refinances if we could do loans for people that were furloughed or laid off. So that is definitely something that, you know, I've had run in. I have to ask people, you know, how's your job? What's going on with your job? So anybody that is not employed and not getting paid, then unfortunately we can't do anything because you have to be employed. There's the ability to repay rule. We have to show that you have the ability to repay, and that's with being employed and actually gaining income. So there have been ones that I have had to say, okay, let's just wait then until, you know, you get back to work and let's see where things are and go from there.
I wonder if you're going to be just inundated with people once everybody does actually start going back to work. You guys are just going to get swamped.
Yeah, it's been pretty, I mean, it's been pretty crazy. I'm pretty swamped just with a lot of inquiries, and I don't doubt that. But there's also people still buying. You know, there are still people that can buy, the ones that are, you know, and honestly, it's probably a good time because we're still in a market where there's not a lot of inventory. So if you're able to buy as a buyer, you have the pick of the litter, if you will. Because
you really do. Yeah, because this is usually our busier season. We kind of start really picking up with listings, and you have the weather is beautiful, so you're out looking at property, and it's really kind of changed that landscape.
For sure. So, you know, so one of the things I know that we were going to talk about, we'll go into it, is that Heroes program for those that can qualify for those. But did you have any other questions about the forbearance or the lending market?
No, I think you covered it really well. So correct me if I'm wrong, but the Heroes program is for police officers, firefighters, nurses, right? Doctors.
Not and doctors. So let me before you go into that. There are others. There are some other programs for nurses and doctors, depending on what that is. But this is specifically, and I can show you. I can show you a flyer that way everybody knows. Let me share my screen.
Because there are. I mean, these are some of our most essential, people that we have working right now. So
Exactly.
they still are employed. They still have their jobs. They're probably working way more hours right now than they're used to working because they are so needed in the community. So
exactly.
I'll let you take it from here.
Exactly. So basically there's about 4 types of heroes that we're recognizing in this program, and like you mentioned, firefighters, police officers, and any emergency medical technicians, EMTs, paramedics. And then, of course, our military is in that as well, active military as well as veterans. So these are the heroes that are recognized in this particular program. The great thing about this program is that there are no lender fees whatsoever. There are a couple, I think there's about $147.50 for credit report. There's a couple, like about 3 different fees, but that's it on the lending side. Otherwise, there's no origination, there's no underwriting or processing. So that could save someone well over $12.95. It used to be actually $17.95 at one time. We have since lowered that, or it is going to be lowered. But that's pretty significant when you're looking at closing costs. And so that means for these community heroes, we want to give back. We want to, because if you're not a hero and you're not in any specialty program, you are paying those processing and those types of fees, underwriting fees.
Well,
So
and it's kind of a good negotiation, strategy too, when you're buying, that if you were in need of some closing cost assistance, if you're getting those fees waived, then, that's a good spot to be in.
Yeah, and at Alderus, we definitely are a local, we're a local mortgage banker, and we just want to give back to the community. And we feel that these heroes really do contribute in our community, so we just want to give back, and this is a way that we can do that through this program. And I'll tell you, there's really great rates as well. This is across any of the platforms with, conventional, with VA, with FHA, whatever is going to work best to get them that, the best rate, and also the lower, getting those fees, of course, cut out.
Yeah, that's a great program.
It is. It really is.
Yeah. So if you know anybody who falls into one of these categories, and or you are, and you're looking to purchase a home, this is a great program for you to be able to use.
Indeed. And I'll get that to you so that you can share that with your community.
Yeah, absolutely. Yeah. So is there anything else that you can think of that right now you see affecting mortgages?
Well, I mean, I've gotten a lot of questions specifically from people like, oh, is it still a good time to buy? Should I wait? And that's a really good question. Again, we don't know really what's going to happen. All we can say is that we probably will have, our market will probably take a little bit of a hit. What I want to say though is the good news, and this, Eileen, going into this pandemic, our housing market was very strong.
Yeah.
We were not even at a level before the crisis, before when the financial crisis happened. We were in a bubble. We were not in a bubble going into this. Our numbers were very strong, not just in the whole economy, but in our housing, especially here at home in Las Vegas. Our numbers were very strong. We had decent inventory or good inventory. It was thriving. And like you said, going into the spring would have been like, wow. So again, going back to recovery, I think after we see where things are, after this coronavirus is under control, and then we can assess the damage and see where we're going to go, then we'll kind of understand. But I think for home buyers that are interested, I'm still getting people that want to buy, and I'm still giving pre-approvals out. So because I'm explaining, hey, listen, even if you buy, we got to look at, does it make sense for you to continue renting versus buying? Because
Exactly.
you're going to have a housing payment whether you buy or rent, no matter what. I went through the financial crisis. I own my home. I could make my mortgage payment, and I did. I did go under about 30 grand. Now I'm up like well over 100 grand. It didn't matter to me as much. And so that's kind of the message that I'm sending is, if you're only going to keep the home for 2 years, then maybe you don't want to buy, but if you're going to.
And we're still more stable than the stock market.
Yeah, and that's the thing is, with any investment, you're going to ebb and flow.
Yeah.
Those ebbs and flows. But with real estate and buying your primary residence, again, that is like one of a great way to build wealth as just an average, person that's owning a home. There's a different level, a different mindset, a different set of skills. If you're an investor, that's a whole different story.
Right.
But if you're just an average homeowner and you're looking to buy a home, home ownership usually always makes sense. We can always compare how much are you renting versus what your mortgage payment will be and how much over time wealth can you build. And that's really what we need to look at.
Yeah, well, that's a powerful tool to be able to have, because I don't think people realize, they look at the upfront cost. They
Right.
don't really look at 5 or 10 years down the road,
Right.
the wealth that can be built.
That's a great tool for that.
Yeah, and I have clients, young clients, in their early to mid 20s who have bought houses who, 5 years later, 7 years later, they're able to sell that property and still have money to put
Right.
very large down payment, almost keep their payment the same as the house they had bought, 5 or
Right.
7 years ago. And I just don't, know that everybody understands. It's not just because you're owning something that belongs to you, you're actually investing in your future and building that, that wealth for yourself. So, it's our, in March, our median home price hit 319,000,
Yeah.
which pre-housing crisis, it had not hit that.
Right.
And we've done this over 10 years, 12 years, something like that. So it's definitely, we're going in the right direction, and we might see a little bit of a correction. Prices might go down a little bit because of, this pandemic, but it's not going, in my opinion, it's not going to crash like it did before.
Right.
Because that recession was due to housing. This is due to a global, virus that, there was no way of actually, us doing anything in preparation for it that we
Right.
knew to prepare for.
Exactly. Now you bring up a good point, about just the housing and where we could be. Again, it's all unknown. We don't know. Wish we had a crystal ball, but we don't. So we kind of, and when you have something like this happen, you really don't know, like I said, until the smoke starts to clear, and then we can see kind of where we are going to go. I think you just have to make a decision that's right for your family. Make sure that you're talking with experts, both in mortgage and in real estate, someone who's going to really take a look at what you're doing. And sorry, I don't know if you guys can hear TV in the background. But so just talking it out, having conversations, that's what I've kind of been having, is a lot more conversations about this. It doesn't cost anything to talk to, someone, if they have a little bit of time, a few minutes to spend with you, then, sometimes that's all it takes to help you kind of decide.
Yeah, well, and that thing is just checking in with everybody, see how they're doing, answering any questions that I can, and everybody's situation is different. They're kind of all looking at it, from very different circumstances. So it's interesting to see the variety of questions that people are asking. because no one's situation is the same. So, you know, I just keep telling everybody, you know, when we know better, we can do better. You know, so now it's like, oh, okay, we know now that we have to plan that.
Right.
There may come another time in our lifetime that we are stuck in our houses for a month or 6 weeks. You know, I mean, before this, we never could have said that.
Right. Exactly. Exactly. Yeah. So we just got to be smart. I've been saying, you know, stay safe and smart. We got to be smart, you know, about what we do as well as safe. So.
Right. Absolutely.
Good point.
Well, thank you so much for spending some time with me today and giving us a great education on whether or not we should choose forbearance as an option if we have a choice.
Last resort. Yeah. No, thank you. I appreciate you bringing this information up and making sure that it gets out to people, because that's what we need to do. You know, we're educators as well. We need to share the expertise and share with what we know to help people.
Yeah, agreed.
So thank you.
All right. Well, thank you. And we'll have to do this again, hopefully next time in person.
I know. When can we just stop the social distancing? They say it's not going to be over for still into the end of the year.
Oh, yeah. No, it's going to be a process for sure.
Yeah. Yeah. One step at a time.
Yeah,
all right.
absolutely. Well, thank you, Julie. And I'm going to link all of Julie's information below this video so that if you have questions, reach out. She's got answers.
I hope. Right.
Well, you have answers. They may not be the ones that people want to hear, and the answer may change, but you'll have an answer.
Very true. Thank you,
Right.
Eileen.
You're welcome. I'll see you guys next time. Bye.